So just to give you a little idea of how this works, our course leader, our workshop leader, Sara Murphy, is going to give a short presentation for about 15 minutes, and then the majority and the balance of the session is going to be focused on discussion and interaction. So we'll be going around to the different participants in this workshop to get their ideas on, first of all, how they're using some of these concepts in their current curriculum, and then we're going to share with each other to find out how we can better address sustainable investing and integrate some of those concepts into what's being taught in the colleges and universities, with the ultimate goal, of course, in better preparing workforces to address these when they go out into the working world. So just a small housekeeping item. If for some reason the software crashes, and it does happen sometimes, for those of you that are watching in the broadcast audience, just stick by your computer. We'll go offline for a few minutes, but then we'll be right back. If you need to, just refresh your page and the video feed will come back up. For those of you that are inside the Hangout around the table here, just stick by your email. If it does crash, I will send you an email with a link. Just click on the link and you'll be right back in the Hangout. So it's very simple. Okay, so with that, let's just go ahead and get started. I'm going to introduce Sara Murphy, who is our workshop leader. There she is. And she's going to start us off with a presentation. Sara, why don't you tell us a little bit about yourself and about sustainable and responsible investing, and what's the current trend and how is that developing in the business world?
Sure, thanks, Lauren. I appreciate it. I'll ask you all to bear with me. I'm coming off of a nasty cold, so my voice is a little compromised, but hopefully you can hear me okay. I am an independent consultant on sustainable investing. I've been in this industry for 16 years, previously on the asset management side. So I'm just going to share with you the stuff in my wheelhouse, and I'll ask you not to hesitate if I make reference to something that's not familiar, or if you have any questions. I know all of you come from a broad range of backgrounds, so just jump in if I say something that doesn't make sense. And with that, let me pop over to my presentation. Okay. All right. So, and I'll move through the initial slides a little bit quickly since we're trying to keep this to 15 minutes. But do stop me if there's something you want to hear a little bit more about. But I'm going to assume that this group here is going to know a little bit more of the introductory material than would someone in a student capacity. So basically, you know, if we look at the history of SRI, it helps us to understand where it is today. It actually started out in the religious arena, where churches and other religious institutions wanted to align their financial management with their values. And so some of the earliest mechanisms for doing that were simply by an exclusionary pathway, so to eliminate investments and activities that the group didn't sanction. So for instance, things like weapons, later as technology developed, abortifacients, things like that. But over time, as more groups got involved in this, and investment according to one's belief system and values became more mainstream, it also became a mechanism for seeking out investment opportunities. And my assertion is that today it has become a value-adding strategy if it's handled correctly, and that it can actually improve on returns for your portfolio if you do it properly. That having been said, it's also tricky because SRI is something of the victim of its own success. 15 years ago, analyzing companies for their sustainability behaviors was easy enough. You had all kinds of tools at your disposal. Looking at a company's website actually gave you a fairly honest snapshot of what it was doing. You could call up a factory floor and talk to workers and get the real scoop on labor conditions. But as SRI became the world's most quickly growing asset class, and that's really true by orders of magnitude, suddenly everyone wants to be the SRI darling because there's a lot of money going into that space. Even though it's still very small compared to the conventional market, it's growing quickly. But it makes the analyst's job really, really difficult because now we have entire PR machines behind slick websites and great messaging campaigns that really sort of obscure the actual state of affairs going on behind the scenes at a company. It's sort of like the organic food label in that regard. I'm sure you all have followed that, especially in the United States context, where basically the USDA standards can be really comfortably manipulated to get the label, and a lot of the sort of purists feel that it's even harder now because of the standard to get access to what they really meant by organic food. Same thing's happening in this space. But it's worth taking a step back to consider what investment is. In the purest sense of the word, you're buying a piece of a company ostensibly to promote its growth over time. There's an interesting thing to consider. Back in the 50s, the average length of time that a given share was held in an individual owner's hands was around 9 months, depending on when you looked at it. Today, it's actually mind-blowing to consider how long it is now. It is a fraction of a second. This is because of high-frequency trading and all of the computer technology behind the way we trade shares at the moment, which really works against sustainability. But for longer-term asset holders, it's really something where you want to invest in a business and you buy and hold good businesses. So having said that, it's worth talking about core business. My personal belief is that the SRI space and the analysis of it has gotten into a little bit of a quagmire around metrics and data and the attempt to quantify absolutely every possible aspect of a company's behavior and the way it conducts its business. There are some investments advisors and asset managers who use hundreds of data points in complex models to assess sustainability of a company, and I feel that at a certain point they lose the forest for the trees. I think sometimes you have to step back and just ask, what is the company's core business? What does it do? To what extent does its product or service contribute to sustainability or detract from it? Is this company solving a problem or is it creating one? And when you start to ask those questions, I think you get a lot closer not only to understanding the real sustainability of a business, but also to understand its value added. And its prospect for long-term growth and to contributing to your portfolio. In a classroom setting, I would posit this poll question because I think it teases out a lot of important issues. The question of whether or not morality should be a factor in investment decisions. And I am going to reserve my judgment on that one. Maybe that's something we'll talk about after the presentation if you're interested in that. Moving on, I think that a big part of SRI is around managing risk, and there's no better example than that of climate change, especially right now. This past year has been a really, really important one for climate change itself, the science behind it, the legislation around it, the shifting in public opinion, and also in actual tangible impacts on companies and their business models. A lot of companies still think it's not a risk, but the SEC is requiring disclosure in companies' annual filings. They are supposed to directly address the risk around climate change. Now, that's got a long way to go. Most of them just talk about the risk of regulation rather than looking at things like risk to their physical infrastructure, risk to their business model. And that's nowhere more clear than around the issue of unburnable carbon and stranded assets. I'll explain briefly what that means. If you look at things like oil and gas companies in particular, they base a lot of their valuation, in fact the vast majority of their valuation that goes onto their balance sheet, in part on their hydrocarbon assets. They value those, and that becomes a part of their balance sheet. Now, that's all well and good if, in fact, every single molecule of their hydrocarbon assets is, in fact, exploitable. The problem is that if we go into a framework of global governance around climate change, and if we actually put into place some real action to try to constrain global warming, particularly within the 2 degrees Celsius model, by most estimates, these companies can only burn about a third of what remains of their hydrocarbon assets, depending on the source. And this leads to a scenario of what's called stranded assets, which is actually a known concept in the investment world, where you have assets that you cannot use. And if you cannot use them, You cannot possibly value them on your balance sheet as part of your assets. It's sort of a doomsday scenario if it actually plays out. Meanwhile, you have another area, social license to operate, which is the concept of, this gets much more into the human rights space, where we see companies operating particularly in less regulated areas of the world, typically developing countries, where they basically go in and they don't involve the communities in which they operate. They don't take care of the environment around their operating sites, and they face an eventual backlash. This is particularly true with extractive companies. It used to be all metals and mining. Now it's a lot of oil and gas, and increasingly agricultural companies. So you can look at a principle called free, prior, and informed consent. That's actually the benchmark strategy for companies managing this type of problem. It's a process of community consultation where they can get folks involved in being a part of the business development, but also having buy-in. And it's a great way to prevent some of the problems that we've seen with companies in the past. Maybe no better example than Shell operating in the Niger River Delta. If you'll allow me a brief anecdote, I'm sure you're all familiar with the fact that Shell oil has basically spilled all over that area. Really, really, truly undermining a lot of agricultural land, livelihoods. It's actually quite a disaster. And I remember once sitting in a room with a bunch of the senior vice presidents from Shell, and I asked them about this. I said, "What's going on? You got oil leaking all over the Niger River Delta. How do you account for this?" And their slick answer, because of course they've got a huge machine behind them, and they've had lots of time to think about how to spin this. Their slick answer was, "Look, this isn't a problem of aging infrastructure. This isn't our fault. This is the result of sabotage on the part of the local population." And they sort of expounded for a while. And I ultimately said to them, I said, you mean to tell me that you have such terrible relationships with the local population there that they're actually sabotaging, they're cutting off their nose to spite their own faces, they're busting open your oil pipelines and thereby undermining their own livelihood because they hate you that much? This is your great answer? And sort of had a speechless moment in the room. So this is really something to consider because they're losing their primary asset under that scenario. We can also look at things, reputational risk is a big one, especially for major global brands. If you're ignorant as to how your supply chain is working, where things are coming from, and potential for things like child labor taking place in your supply chain, your brand can be undermined. We've seen it with Nike. More recently, we've seen it with textile companies. And the backlash from consumers can be problematic. Meanwhile, there's also opportunity behind this, more than ever before. So that each thing that I just talked about presents a flip side if companies handle it properly. Some of the issues around agriculture and energy challenges that we've been facing around climate change actually converge to support an industry if folks are able to perceive the trends and respond correctly to them. And this is maybe the crux of the argument from a value-added perspective. If you consider that sustainability and looking at it through the investor's lens is all about identifying major trends that are sort of, they haven't yet appeared on the radar of conventional investors because they're not taking an ecosystem analysis approach, then the theory is that you can see a trend that's going to affect stock price before the rest of the market has priced it in. There's your value-added argument. And so there are these major industries that are growing up around the challenges we've just discussed. Carbon capture and storage, while I still have major reservations about its long-term durability, is something that's cropped up because of this challenge. Energy efficiency behaviors, an entire sea change in the way that our utility grid is going to look in, say, the next 10 to 15 years. All of these are results of seizing opportunity. And you can watch utilities behaving very differently. You look at NRG Energy. I was talking to their, I love that name. I was talking to their CEO, and he was, I was asking him about his concerns around rooftop solar, which fundamentally, if you project it out, guts the traditional utility business model. And he basically said that he's actively engaged in the destruction of the entire way his company has always worked, and he's going to be a part of the future. Now you take that and you lay it next to other utilities who are basically clinging tooth and nail to a system that is dying. And it's really quite remarkable to see it's not hard to imagine which ones are going to succeed and which ones are going to fail. With respect to the social license to operate concept that we just discussed, an unexpected opportunity arose for a company that begrudgingly got involved in trying to deal with those problems. Some of you may remember that the name Rio Tinto used to be associated with all kinds of horrible things. They're a mining company. And about 10 years ago, they just kind of got sick of activists and being berated in the press. I can't say that they had any better reason than that, according to a lot of their executives. But they started dealing with this a lot more seriously and doing community consultations and getting buy-in. And the amazing result of that down the line that they hadn't foreseen is that now they're getting offered preferential access to new parcels of land, new exploitation opportunities by governments that recognize them as a good partner. So this has created a business opportunity that they just didn't see coming. They just did the right thing, and look what happened. And meanwhile, you can look at if you all remember some of the horrible incidents around the textile factory fires in Bangladesh, which, by the way, have been going on for years, but the most recent one was really quite dramatic. We saw a real difference in the way European companies versus U.S. companies responded to that situation. And the European companies really sort of got behind trying to formulate a better best practices system and a voluntary organization that would have dealt with some of the risks involved and the reasons why those fires kept happening. Whereas the U.S. textile companies went on the defensive, and that their brands really suffered for that as well. Monsanto is almost too easy a target, but you'll all notice what's going on in the news right now with their problems with glyphosate and everyone finally admitting that it might be a carcinogen, which we've known for years. And their share price is down 10% right now. Now, I will always caution against trying to assume that we can attribute share price movements to any one factor. So that's sort of a facile thing to say. But their reputation has taken a hit, and they could have dealt better with that. I'm going to pause here as I speak just to see if anybody has any questions.
I don't have any questions right now. One of the things that I think I'll bring up during the discussion is, sustainable investing as a facilitator for innovation, particularly from the students and the future workforce's perspective, because we can see that there are a lot of underlying values and underlying opportunities, I think, that come up later on down the line by actually shifting your operations to a more sustainable type of operation. So that's something that we'll talk about a little bit later, but at this point I don't have any specific questions. Do others have any questions? I don't think so. Okay.
I think that was enough time to unmute yourselves if you wanted to.
Right, exactly. Okay. Go ahead, Sarah.
Actually, that was kind of a nice layup, Laura, and I appreciate that because, and there examples of what you just said abound, but I'll not go on a diatribe. We'll have more of a discussion about that. But this is one that I really like. It's maybe not so much innovation in terms of product design, but more in terms of systems. And Lauren, you've already seen this one before, but what you're looking at is a map of the U.S. rail system. And the reason that I put this up is to illustrate how this sort of systems thinking can lead you to perceive opportunities that you might not have otherwise noticed.
Right. Right now, all I can see is the first slide that you're discussing.
Oh, really?
Yes, I was going to say the same thing. Thank you.
So you're not seeing the rail map right now?
No.
No.
Yeah, go ahead and do it. Work from PowerPoint, and you should be able to put it up there.
Yeah, that's what I'm doing.
Okay. Or maybe just close the program and reopen it, and you should be able to see it.
Yeah, okay, I'm doing that right
there you
now.
go. Now we can see it.
Oh, okay. So have you been seeing the other slides as I move through them?
No, I haven't seen them.
Oh.
Okay, well, that's all right. Let's continue on.
Okay. So, all right, so you see the rail map now. And this is, so we're looking at the U.S. rail infrastructure. It's a few months old, but basically as it stands today. And the reason this is fascinating to me is that over the last 2 decades, agricultural production has been growing the most in the Northwest. Meanwhile, agriculture depends thoroughly on rail transport to move the goods around the country. Rail is by far the most efficient and cheapest mechanism by which to move agricultural products. It also has the least greenhouse gas emissions compared to other modes of transportation. Meanwhile, you might be aware of the fact that a lot of unconventional oil and gas development is also moving up in that direction, particularly around tar sands up in Canada. And as you all know, in the wake of the dismissal of the Keystone XL pipeline, oil moving by rail is a thing that basically is here to stay. So the problem that we have with that situation is that there's a real chokehold on capacity movement taking place up there in the Northwest. And oil is sort of edging out the movement of agricultural products, even as we're having a lot of crop failures in Canada, which is our breadbasket, because of the drought. So there are a lot of sustainability issues packed up in what I just said. But basically, if you're a rail operator, you need to be looking at this map and looking northwest. And so should investors, and they should be looking at folks who are understanding that dynamic, but also who are practicing more, who are looking into rail safety, particularly around all of the tanker explosions that we've been seeing with such tragic results. So anyway, that's just a single example. I am shifting slides right now. Lauren, can you let me know if you see the next slide now?
Yeah, go ahead.
Okay.
I still see the map though.
Oh, strange. Okay, maybe what I need to do is
there you go.
Yeah, so I have to move it out of presentation mode every single time. Okay. So one of the challenges with this, and I've made a really rosy case here, and I should say, when I was on the asset management side, I can tell you that running a fund with this, running multiple funds with this sort of framework in mind, we outperformed. Now, again, you have to be careful about single factors, but what my basic takeaway is that an SRI strategy had us outperforming our benchmarks, and we didn't use SRI benchmarks, we used conventional benchmarks. So we had a lot of clients who were with us just because of our performance, not because they even cared about sustainability. So that's a really nice case to be able to make. Having said that, I don't want to be naive here. Some of the worst abuses that we see don't register in stock prices to any meaningful degree. Some of you may have followed the recent case with Chevron in Ecuador. It's really hard to overstate the amount of environmental damage that they did there, and also damage to communities. And one of the largest lawsuits came against that company in history, and investors just didn't care. The stock price barely moved. Same thing with Shell in the Niger River Delta. After what I just told you, that company is doing fine. And Monsanto, for as much as it suffered a little bit on glyphosate, for all of its really, really horrendous behaviors, particularly as relates to small farmers, they're doing great too. And so, here again, what I often do with in a student setting is I'm going to ask you, if it doesn't hurt the stock price, does it matter? I think that's really something worth considering, because it's great to make the values argument, but it's actually not really something that tends to bring a whole lot of people to the table. So anyway, I will proceed from there. So, the question of whether or not SRI creates outperformance is an important one. As I've just told you, I've seen it. I think that it's real. I think that when it's done as a really thoughtful ecosystem approach, it works the best. I'm fairly dismissive of the heavily data-driven approach in and of itself. Data matters, but it shouldn't be the only thing that drives your approach. And of course, there's no right way to do SRI. There's no sort of absolute truth behind any of this. There's no such thing as a perfectly good company nor a perfectly bad one. Even using those words is almost more of an emotional thing. So depending on what factors you choose to emphasize, you're going to have different outcomes. There are a lot of attempted studies to try to evaluate this question once and for all. There's still sort of, again, it's really hard to isolate these factors. What we've seen is that you can say that companies that report on sustainability slightly outperform. And that's been fairly well demonstrated. And when you think about that, if you take that to the next logical step, everybody knows in business school that you don't manage what you don't measure. And of course, you can't report on sustainability if you haven't measured at least some of your outcomes and some of your inputs. So there's some sort of case to be made there. But really, I think that the power in this is in what I was describing before, the ability to identify trends before the broader market has seen them coming, and to plan that into your investment strategy. Okay. So at this point, I think I've taken my 15 minutes. What I would cover now, and what I'm happy to cover if you all want to hear more about it, is a couple of trends that are taking place in this space right now. For instance, and I'm deep in this season right now, so this is heavily on my mind, the proxy voting season, where investors are able to vote their proxies at companies' annual meetings, and activist investors using that shareholder resolution opportunity to advance social and environmental agendas. This is a fascinating trend, and it's really starting to make waves in corporate boardrooms. We can talk about the notion of top-down versus bottom-up analysis. So when you're considering sustainability, do you start from major themes and filter then down to how they affect companies? Or do you start with companies and try to extrapolate their behaviors to broader trends? I would argue you do both. And I've already spoken a little bit about data providers and their checklists and how that creates a certain burden on companies. But those are some topics we could explore if you wanted. But for now, I think I'm just going to go ahead and turn this over to more of a discussion phase and see what you all think, and if there are questions I can answer, and let's have a discussion.
Okay, it sounds great. Thanks a lot, Sarah. For me personally, these are very, very interesting areas and very consequential areas. I think when anybody has to look at sustainability, especially your comment that when you look at companies like Shell or Chevron and Monsanto and the problems that they have had with their operations, and in a lot of cases their stock prices barely move. Obviously, we are in a market-driven economy, and we have to look at those things that help drive the value of companies and the stock prices, because that has a very real impact on what they do. So, but what I'd like to do, I'd like to pose some questions to the other participants now. And first of all, I'll just ask, are you currently addressing any of these types of sustainable investing concepts in your courses at this point? I know some of you are teaching an MBA program, some of you are from the science side. So let me turn it over to you, and I might just call on you. If Teddy is there, I'd like to get your perspective, because I think you are teaching from the natural sciences side. So are you at this point addressing any of these types of sustainable investing concepts? For example, risk management is a big one for all these companies, and how are you doing that in your courses? Be sure to unmute yourself. There you go.
There. Yeah, actually, I teach at two different places, and one is, well, they're both within the natural sciences. One's a senior level course, and the other one is for intro to sustainability. And like many colleges and universities, sometimes that means that it's for people who don't necessarily like the sciences, and so they take it that way. Regardless, I think that's the class that I'll focus in on here. Yes, we have tried to teach it, but that's why I'm here, because I could use a lot of help. These students are not business people. They tend to be lower socioeconomic class. They are doing whatever they can to make a better life for themselves, and that's why they're in college. So they see divestment as something that is not meaningful or relevant to them. And so it's been very difficult to get them to understand why it's important that we talk about this. And so those are some of the questions I have. How do you introduce it to, not all college students are wealthy or higher middle class. And how do you show them that it is very, very important? I will tell you, one of the things that I do start off talking about is more from a consumer point of view. How can you get companies, corporations, organizations, whatever, to have a better record of environmental justice issues, or things that are very local that is much more relevant, that they can see that they can make a difference in. So that's where we start. Of course, we do talk about divestment, but again, I tend to lose them about that time. So.
Okay. Okay, great. Stephanie, let me ask you really quick. I mean, you are in an MBA program. Are you addressing any of these types of investing concepts in a meaningful way in your courses at this point? I think she's there. Oh, there she is. Okay.
I am. Sorry, I had to move my computer a bit.
That's all right.
Yeah, so I help run the BARD MBA in Sustainability in New York, and we certainly do address these issues in our courses. I don't teach anything specifically, and I've done a similar MBA, but these issues will come up in our Intro to Sustainability course, which happens in the first year, in the Finance course, which is usually second semester or first year, and then also right now students are interested in delving in a little more, specifically more like social return on investment, but also that touches on SRI in our Business Pragmatics course, which is a series of short courses that students voted on for areas they wanted to dive deeper into these things. So certainly these are big issues we discuss. We definitely do it through, a lot of times through case studies. So, Sarah, you kind of brought up, these specific examples. So those would be really analyzed, torn apart a bit more, and then also perhaps like looking at the financials behind. Looks like I was muted. You hear me?
There you go, Stephanie.
Yeah, sorry. Someone was muting me.
Okay. Hold on. Yeah. Okay. Try again.
Does that work?
There you go.
Yeah. No, I'm pretty much done, but definitely, absolutely, this is part of our MBA curriculum and of great interest to our students who are interesting. I mean, a lot of our students come from the New York City area, but not all of them live in New York City. So, but I would say New York, a business program in New York really draws students who are interested in the financial side of things, and so from that perspective, they certainly are. And then a lot of our students come from DC, Connecticut, New Jersey, upstate, Hudson Valley. So, we do have quite a population of students coming in, as well as our students really range in age from age 24 to 60. So varied interest there, but certainly SRI is quite important.
Okay, great. Sarah, would you want to respond to any of those comments at that point? If not, I have another one.
Yeah, it's interesting. Teddy, I was just thinking about what you were saying regarding divestment, and it's funny because I have rather mixed feelings on that. But I think with the students you're describing, I just keep coming back to why I'm in this business in the first place. If you can hit home the notion, I mean, look, we all know that it's a David and Goliath situation, and that those students have spent their entire lives feeling that way. But I think that if we're able to communicate the notion that the all-powerful factor is the dollar, and that if you can hit a company where that lives, you can start to level that playing field, that you can actually have some effect, the concept of SRI becomes incredibly powerful. And I think it's actually a tool by which someone who feels disempowered can gain more of a voice. I don't actually love the divestment movement. I have a lot of reservations about how it works, but the fact that it creates, that it helps to give an outsized voice to a community that's been sort of underserved is remarkable. And so I think, taking that tack with those students and helping them to understand the value of the dollar, whether we like it or not, that is what drives our system. Yeah, I think that can be really powerful and help to bring them to the table.
Okay, great.
Just a follow-up here. Actually, one way I think that I've been able to make it a little more relevant is as the university is looking into these issues, really bringing them to the table. Because I remind them as students, they are all powerful. If you're staff or faculty, that's not always true. But what the students want, they usually get. And so they're learning how to use their voices in that way. And when they start finding out that the university does invest in certain areas and that they might have a say, sometimes they get a little loud with using their voices, but it's all, I mean, that's what college is for, right? Is to learn how to use our voices for that. And so I've been very happy about that aspect. But when we talk about divestment in the whole, it's really hard to find those really relevant empowering moments for them, because as you mentioned, if they don't feel that, they tend to just turn off. So that's one way that I've been able to come back.
Okay, great. Another concept that I think is very interesting, which is more of an interdisciplinary concept, and you've seen this around in the consultancy circles and the accountancy firms in the past couple of years, is the notion of natural capital. Okay, and how do you define that? Because natural capital is, at this point, is very much of a squishy concept in some ways, you know, because you do have the provisioning services of the ecosystems. Okay, they give us timber and fisheries and, you know, minerals and raw materials and that sort of thing, and those are all very much quantifiable in the current system that we have. Now, on the other end of that, we talk about some of the things which get more towards the morality issue that Sara raised. Is that, how do we value the things like spirituality? Okay, how do you value things like the healthcare effects of being outside, okay, the recreation opportunities, that sort of thing. These are all very real, and in fact, you could quantify some of those as well in terms of tourism and that sort of thing. But there's an entire spectrum of value, and how do we define value? There's been a lot of work in the accountancy sector on how do you maybe quantify these things. Sara, what's your view on that? And to me, that seems that might be an interesting interdisciplinary way to look at sustainability in a business and investing way. But how would you, first of all, how do you feel about that? What's the state of play, and how might we address that in a teaching setting?
Mm-hmm. Yeah, it's funny. So my master's is in economics, and I spent a lot of time deep in the weeds on different valuation methods. Having said that, that's it's not so much a part of my current work, but I can address it in the broad. I mean, yeah, there are all kinds of mechanisms. You know, you can value the ecosystem services. You can do hedonic regression, which has to do with trying to quantify how people feel about an outdoor space. There are all kinds of ways to do it. Each way has its strength. Each way has its weakness. I think that process, even in the context of imperfect metrics, is really important, because at the end of the day, there are always going to be people at the table that need you to bring it down to numbers. And so, and economists are getting better and better and better at doing this, and I agree, the interdisciplinary way is the only way to go. I remember sitting in class and listening to a very arrogant professor say, "I don't see what's so special about the spotted owl." And there was a biology student in the class who said, "Well, I will help you to understand that." And so, I feel like you can't do these valuation models credibly without having that sort of interaction and that collaboration. And you have to have them, because sooner or later, people are looking for capital. They have to have a model that you can put in front of people. You have to have a bottom line. It has to be based on something. So I can sit here all day and tell you what's wrong with every single approach, but the fact that they exist is important. And what's really, really promising is that some of the early stage stuff that economists were working on around natural capital is starting to actually show itself to have been pretty valid, and that nowhere is that more accurate than around water right now. Companies are seeing that the dollars and cents that were predicted, it's actually kind of worse than people thought it was going to be, and a lot of thoughtful companies are running genuinely scared around their access to the single most important natural asset that they have. So yeah, I mean, I don't know, I hope I answered your question. I think that valuation methods are incredibly important, and students who are working on them and diving into bigger and better ways to do it are on the right track.
Okay. Do any of the teachers or the other participants, do you discuss natural capital and those types of valuation methods in your courses at this time? And if you do, how do you address those?
Hi. I would like to tell you more about my experience from teaching at Ryerson University. We have continued education school, and most of our students are continued education young professionals who are already working. And for them, it was really interesting to learn more about opportunities we may discuss regarding, for example, their registered plans. People believe that they do nothing investing in harming technologies, but they simply are not aware of what kind of money they are invest and where. And sometimes it's really good to discuss this issue in fundamentals of sustainability course. And another topic you addressed was about spirituality. And spirituality and moral issues are very important here in Canada because of indigenous rights, indigenous and aboriginal people issues, and you know it's a lot of different discussions about it. And I know that indigenous people highly encourage Canadian government to do more sustainable investments, and what they understand under this kind of investments. For example, we speak about water infrastructure. Indigenous people ask for infrastructure that lasts at least 50 years. And the government says it doesn't make sense to invest in such kind of infrastructure because they think probably about 5 years in political terms or 10 years normal guarantee or whatever, but definitely not 50 years. And what is the moral issues for North American businesses, it's totally different moral issues for Aboriginal people in Canada. And this is why conflict exists, because people cannot agree about basic things. And for us, Aboriginals are very important, providing real deep understanding of sustainability, because they speak about 7 generations approach, but they not only speak, they implement it. And if North American businesses do not understand this, they have difficulties to work with Aboriginal businesses here.
Okay. It's very, very interesting points. Yeah, that's an interesting thing when you speak about water infrastructure. And this is also goes to risk management, is that if you're looking at, and Sarah, you said this at the very beginning of your presentation, in that I had no idea that the average holding time for a stock was now down to, you know, fractions of a second. It doesn't surprise me in a lot of ways because of the high frequency trading. If you look at a lot of the investing gurus, for example, you take Warren Buffett. I mean, one of his favorite sayings is that my favorite holding time for a stock is forever. You know, you find a good company that's well run and you hang on to it, and that's how you build wealth over time. That, to me, that might actually be an interesting approach to teaching young students about what sustainable investing is, because that maybe even drives it home to how it impacts them personally. You know, when you make an investment, you build your dividends, and that's how you build wealth over time. It's a long-term endeavor. But it also, getting back to, you know, specifically things like risk management and infrastructure. There is a lot of talk right now, especially on the infrastructure space, especially in the United States, because we need so much infrastructure investment. How do we want to spend that money? Do we want to do gray infrastructure, or do we want to look more towards green infrastructure and working with the ecosystems to leverage the ecosystem strengths so that we build a more resilient society over time? And over time, of course, in a long-term perspective, that's going to be a better investment. So, Sarah, let me ask you about that. Then I'll open that question up to the rest of the group. What's your take on that?
Yeah, and actually, if you'll allow me to double back a little bit on what the gentleman from Canada was just saying. It's funny. I understand completely the problem that you're describing. And my solution, this is going to sound strange, because I believe deeply in sustainable investing, and partly because of the moral issues behind it. I think it's the right thing to do. I never talk about morality. If I want to advance this agenda, I never talk about values. I don't talk about any of that stuff because, frankly, I find it's where I lose people. I don't win the argument, ever. I talk ultimately about profitability. I talk about the fact that in the end, it's a good strategy for your portfolio. And whether we like it or not, I mean, we can sort of bemoan the way we got here all day long, but that's a language that everyone understands. That's a case that can apply across the board. And it helps to avoid some of the discontinuity in value systems, some of the differences in the way people see the world. So I know that's maybe a controversial thing to say, but it's where I found the most success in making the case for this. I just don't talk about what's right. I'm talking about it with you folks because you're sort of the choir. But I don't know. Take that for what it's worth. But in terms of infrastructure development, I kind of think we need, we kind of need we need a little bit of everything. Okay, I'm going to cheat a little bit because I'm not actually going to answer your question entirely. I think that part of the problem is in even understanding what is green and what is gray infrastructure. I think so for instance, if we go back to that rail model that I showed all of you, again, I'll go ahead and tease out a controversial issue. Was Keystone good or was Keystone bad? A lot of people very comfortably said Keystone was bad, but if its axing results in more and more train explosions and our inability to move agricultural commodities around the country, is it still good? Is it still bad? And ultimately, the further you dig into an ecosystem approach to a topic, the more difficult it is to easily assign something to one area or another, which is why I prefer not necessarily to segment them in that way, but to try to understand all of the issues at play and understand whether or not on net this particular approach does us more good than harm. And sometimes that's not necessarily a green one. That can be a gray one. So that's a cheat. That's a cop-out. I hope it's okay.
Yeah, it is an interesting topic, and let me ask some of the others now. How would you address something like that in a teaching environment? Would you pull different views from the different industries or the different sectors? How would you address that in your own specific space, whether it's from the business side or the science side? Anybody? Okay, Stephanie.
I can speak generally about it. As I said, I don't teach, but what I've observed in our program and what I've seen in business school is that you can have a debate style, right? You can have two sides presenting different issues or different groups and doing breakouts around that. You can do a lab. You can basically say, this is the challenge. You want to build something, and you got to look at all the things that go into building something green versus not, the cost, the effect on society, what that means in a bigger systems thinking way, how does it employ people in the community. There's so many different levels of what this all means, and it also brings up the fact that, kind of Sarah, as you were saying, that companies really aren't good or bad. There are certain things that they do that they feel are good, so they might concentrate on the community. They might concentrate on the environment. Some concentrate on all of it. So it's very interesting to see, like, where is that line? And I think putting students through a lab or through a case study or kind of a mini competition or consultathon, whatever you want to call it, kind of the idea of a hackathon where you're trying to solve something rather quickly, forces them to have to make those decisions kind of like an executive would in a way without complete information, and to think through that process. So that's how a business school, I think, we approach it in a lot of ways, very hands-on and very much group work on that stuff.
Okay, great. Teddy, do you have any comments on that?
Yes, I do. Actually, I like what you said about separating values and morals from the other at-hand things. When we first start one of our first meetings as a class, we do this thing called Values on the Line, where everybody who's taken the class seems to think that they have similar values because it's an environmental class, right? So everybody must think exactly the same. I like it because it really takes that out of it, and we talk about dichotomy and how things are not good, bad, right, wrong, those kinds of things, and that we're going to look at the shades of gray a lot. And when we start our classes that way, it's really helpful for the rest of the semester because businesses are in the business of making money. And regardless of how we feel about that, that's just the plain fact. Our values are our own personal things, and we really do try to discuss things and allow everybody to come to it from whatever their background is. But we always find commonalities, so bringing that into it does help. So I think that I like your comment about not bringing in morals and values into it, except as far as the students letting them know that their morals and values are part of who they are, their perspective, and others have other perspectives, which don't make them the enemy. And we can all still talk about our environmental problems. And we do talk about the difference between problems and issues. You know, how we do have problems, and issues is when we try to solve those problems, and we do bring our experiences into it. So I really like that point because I think that it might help me talk about divestment a little bit easier by keeping that same line of thought. Because in this class, we touch on so many different topics. And just like I said before, trying to keep it relevant to the students that are exploring, some of them for the very first time, what sustainability means. Just even hearing their responses to recycling always amazes me, because I think that everybody probably understands that at this point, and then I find out, no, that's not true. So it really humbles me. I have to start at the beginning. But yeah, I like what you said about keeping values. So thank you for that.
Well, and actually, you made me think of an added dimension that I sometimes try to convey to people. And again, we can almost get existential here, but another important thing, I think, particularly for students of that, you know, in the younger age ranges, is it's great if you acted on your values, but was the outcome of your action aligned with that value? Did you actually achieve an end that is in keeping with what you meant? And very often, if your thinking was too simplistic, the result of your action is not aligned with what you wanted. And so I also find myself preaching an outcomes-based approach. You know, it's all well and good what your intention was, but what happened? What change did you drive? And especially for younger folks, that's a hard one to wrap your head around.
It really is. And I found so many interesting conversations with that values on the line because they have the opportunity to justify why they feel that way. With others, because they spread themselves out from 1 to 10, you know, highly agree to highly disagree. And they are shocked when they see the whole spectrum being represented there on something they think is very basic, and everybody should feel that same way. And then we move the line so that they have to talk to somebody who feels the opposite of what they have. And so it's a listening time. It's very interesting. And one of my favorite comments about the whole thing is the one young lady who said, well, I trust myself and my decisions, but I don't trust anybody else and their decisions. And everybody just laughed because that's basically what we were trying to pull out of it. And you know, talking about divestment and our opportunities for understanding consumerism. You know, it's really easy to say, oh, we don't buy plastic, but chances are a lot of the people that talk about it like that do. And so, you know, like you said, do our actions line up? And starting with that, I think is a really good thing in class because it helps you later on when you tackle certain subjects, especially in the sciences, because there people can come in and vote on science a lot of times. And so, you know, having that out of the way and then talking about how science comes into it, it's a very interesting opportunity for me. It humbles me. So thank you for that.
Okay, great. Alex, do you have any comments on that? And then I'd like to pose one final question, and then we'll wrap it up.
No, thank you. I really enjoy conversation, and I am learning a lot. Thank you.
Okay, great. I have one final question and just an issue to bring up. You know, there are a lot of, I think what we've seen is that there are a lot of different ways to approach addressing SRI within the teaching environment, depending maybe on the level of the students that you're talking to. I think Teddy's students are going to be much different from Stephanie's program, for example, because they are, in a lot of cases, practicing professionals. They're more likely to be familiar with the business world and management and operations and that sort of thing. So I think from my own perspective, and let me get your feedback on this, that introducing sustainable investing concepts, even at a very early stage, because it is such a core part, at least in this country, in our market economy, on what drives the market forward. I think that might be an interesting thing, and it also talks about money, which concerns everybody, of course, from a personal finance perspective, from a retirement perspective. We may be very sustainable and recycle and do all those things in our personal lives, but then again, in our investment funds, we might be invested in fossil fuel companies, for example, through a mutual fund. So there's a lot of soul searching and understanding that needs to go into that as well. I do have one final thing that I'd like to bring up, and that is sustainable investing as an innovation driver. And Sara, let me ask you about that. I mean, you said that for a long time you've looked at sustainable companies and that they tend to outperform. And then you also look at the opportunities that come up with the example you gave was Rio Tinto, and they said, well, we're getting sick of activists, let's deal with this problem proactively, and they ended up getting preferential access to a lot of income opportunities. So maybe that is a concept as well that can be introduced through different courses, is that sustainable investing is, in a lot of cases, enlightened self-interest. It's a smart business opportunity. And how would you address that?
Oh yeah, I completely agree, and I think, okay, I will not rail on about this all day. I'll just throw out two examples right now that come immediately to mind. The problems that are posed by society's ability with sort of an open and innovative mindset lead to incredible solutions. I remember once, so again on the asset management side, we used to have a lot of companies come through on road shows because they wanted our money. So they would come and sort of pitch. And we had this Chinese company come through, and we were just sitting there not understanding the product. There was some disconnect happening. They were an environmental company. They dealt in water treatment. There were some language barriers. They had a translator, but something else was not computing. It wasn't just the language. And we finally realized what was going on. We were thinking we were going to hear about a plant or something, where they were treating water from a system. And what it turned out to be, we were thinking about it from the wrong perspective. They just put their product in a river. They were just cleaning the river because it was so filthy that just sticking something in the water and cleaning it provided enough advantage that the government was prepared to pay them for it. And it's so funny because it wasn't computing because we couldn't take ourselves out of our original mindset, whereas they said to themselves, this whole plant mentality is all wrong. The dollars and cents don't add up. We're just going to clean the river. And they ended up creating something that's now used in many parts of China, and for as bad as their water is, it's helping. Meanwhile, you take a company like Intel. So Intel's dependent on water in a way that many people don't think about. In order to make microchips, those superconductor chips, you need what's called ultra pure water, the standard for which is far higher than like our drinking water. The impurity tolerance is almost nil. And they were having harder and harder time getting that type of water through utilities. And so their solution that they tried out, now they're doing this in more and more places, is they just bought the water company. And now they run water utilities for the entire town that surrounds their plant as well. They have become a water manager as much as they're a superconductor producer, because that's the way that they could get the water they needed the most efficient way possible, and the communities around them benefit because they're getting cleaner water at a lower cost. The innovation behind that is just amazing to my mind, and we could go on all day about how that works, but I think it's really, really easy to make that case.
Okay. And let me ask the other participants. Sorry about that, I'm getting an echo. Let me ask the other participants how you might, in your minds, address some of the innovation aspects of SRI in your courses. What are some ideas that you might want to present to your students in terms of how that plays into sustainability and what you're teaching? That's a challenge question. All right, anybody? No? Okay. All right, well, I'll tell you what. Sara, any final comments?
Oh boy. um, yeah, I mean, I just think that this is such a rich area for exploration, and if I have one drum to beat, it's got to be, well, sort of twofold. First of all, if the answers were easy, we'd have done them already. This is a complicated space. I don't deal in dogma. In fact, I really enjoy torpedoing dogma because that's how we start to get to solutions. And the more willing people can be to explore a topic from multiple vectors and to include people from multiple disciplines in that exploration, the more likely they are to be successful. And I have found that that strategy as an investor and as an advisor has been profoundly successful for me. And that's what I try to communicate as much as I can.
Okay, excellent.
Okay, excellent.
Teddy, any final comments?
Not really, but I did want to bring something up about the non-market economy, and I know that this whole session is about the market economy. But I'd just like to ask Sara if you see any way that the non-market economy can work with the market economy to, or any opportunities to work together on these sorts of things. I'm getting feedback too, so it sounds like.
Yeah, no, in fact, it's funny you say that, and the first thing that leaps to mind, and there are multiple answers to that, but the first thing that leaps to mind is the growth in public-private partnerships, and I'm seeing more and more of that instrument being used to deal with particularly environmental challenges, and in fact, one of the other places where I do trainings is entirely aligned around those partnerships. And we help to work with those folks to advance these issues. NGOs play a huge role, especially as they partner with corporations. A group that leaps to mind is Ceres, the Coalition for Environmentally Responsible Economies. They are an NGO. They work with corporations all the time. There's more and more of that interface, I think, that helps to provide solutions to some of these problems. Is that kind of what you're driving at?
Sorry. Yes. Oh, I'm getting lots of feedback here. Are you guys hearing it too? Oh, okay. Yeah, one of the reasons I bring that up is because when I present the chapter that we talk about investing and just you know, our economy. I split it up into non-marketing and market economy and try to present them as opportunities where they can commingle. And of course I have to bring in the science with that because sustainability is about all of it. But I find just because I have more access and because it's so much more relevant to the students I teach, that I spend more time on the non-market. When I really, that's why I want to be involved in this discussion, because I really think that I have to present a better case for them to expand their notions about divesting and about market economies and how it could work for them. And we have a lot of activity here in the Ohio River Valley on non-market economies and shareable economies, and they're getting more and more interesting in terms of economy and alternative economies. So now I'm trying to figure out, well, maybe I could leverage that in some way because I'm so wrapped up in that type of participation, citizens participation, that maybe that could help me talk to the market economy. But I haven't found a way to do that yet because both are important. But how to make it important to them, I guess that's where I'm coming from.
Okay, great. All right, Stephanie, do you have any other comments or questions?
No, I'm good. I just really appreciate this time to engage, to really talk. Makes me think a lot about our curriculum, right? And that's always a piece of being a newer MBA program in our third year, we're always trying to reevaluate what we're doing. So thank you for talking about this and engaging. You know, great to meet you, Teddy and Alex. I don't think he's still here, but just to hear what perspectives you're incorporating. So thank you.
Okay.